All right. Hey everyone, it's Michael Krasilovsky here, and I'm joined today again with Joshua Kittel of Cross Country Mortgage. How you doing, Josh?
I'm doing great, Michael.
Super. And Joshua in particular is doing well because we have loan limit changes that just came through, right?
That's correct. Every year, all us lenders, we look forward to December, not just for Christmas, but because this is when the new announcements for what the loan limits will be. Each year at the beginning of the year, the new loan limits work out pretty well, but values go up over time. So by the end of the year, some clients run up against the ceiling on these conforming loan limits. And so this is where that ceiling gets lifted.
And so I don't even know a lot about this. We were having a brief conversation. Joshua was filling me in before this video, but it seems like this is a prudence thing because home prices are going up and we don't want like all of our buyers to just end up in the jumbo loan territory, right?
Absolutely. So let me kind of explain a little bit what we're talking about when we talk about loan limits. So there's a few different programs, but you kind of fall into two categories. You have your conventional conforming, which is your Fannie Mae, Freddie Mac, and that's one of the loan limits that they have.
Okay.
For 2021, the national max was $548,250. Okay. Now there are exceptions in higher price areas like Seattle, San Francisco, where they have what's called super conforming. But the normal conforming loan limit is the $548,250. And then you have FHA, and FHA is a little bit more complicated because its max loan limit will vary based on the county. So Benton County here, for example, has a higher max FHA loan limit than Lynn County right next door does. So, I mean, literally, if you're on this side of the line or that side of the line, it makes a difference in what you can borrow.
Because the home prices are higher in Benton County.
As a rule, it's higher in Benton County. So yeah. Now, if you exceed the conforming loan limits, first off, let's just say you're going FHA, it has a lower loan limit than conventional. And we won't get into why you might want to go FHA versus something else now, but with conventional, if your first loan limit goes 1 penny over that max limit, you then fall into what's called jumbo underwriting. And the big difference is this, with your government programs, FHA, USDA, VA, and your conforming programs, Fannie Mae, Freddie Mac, there's a secondary market out there. So when lenders loan money, they lend it out, they package it up as a mortgage-backed security.
Sure.
And then it gets sold into the market, and so the lender gets the money back. And so even though the lender's doing the loan, they're not necessarily holding the note. But that's not true with jumbo. So with jumbo, there's not this secondary market out there that you can just trade, and if all of a sudden you say, you know what, we need to unload some of our securities for one reason or another, you can't just go into the market. So with jumbo, each investor is going to have its own rules, its own guidelines, and so the underwriting becomes much more complex.
So for jumbo loans, so that's why jumbo loans would be just more challenging and not as desirable from a buyer or borrower in this case perspective, right?
Potentially more challenging. Again,
okay.
Depending on, now if you're a very strong borrower, but here's what jumbo typically has as a general rule. Okay, again, it's very complex because every investor is different, but as a general rule, jumbo is going to want a higher credit score, a higher down payment.
Okay.
They're going to want a lower debt to income ratio. They maybe want reserves. So how much money do you have left in your account after you purchase it? Those are things you have to consider. More so, property. So you get maybe some jumbos don't want acreage over 5 or over 10 or over 20. And so there's all these different things. And so that's the big difference here is in our area in Oregon, I'd say 90% of the deals that we do are going to be conventional conforming loans. And again, that's just a much easier process to underwrite.
Gotcha. So this is really helpful to our buyers then, to be able to have, a bigger range of prices that they can shop for their homes in that are still conforming loans.
Absolutely. This past year, home values went up over 20% year over year, right at 20% year over year.
Yeah.
And of course, some areas it's hotter than that, some maybe not quite as much, but that's the average. And so with home prices going up that high, some of the issues we're having, let's just say for our FHA clients, which typically have lower down payments, although conforming has a 3% down program, so which actually beats FHA. But FHA typically allows higher debt ratios and gift funds and different things like that, and more lenient on credit, like some what we might call significant derogatory bankruptcies. How long do you have to wait after that, or having had a 580 credit score? It sounds like somebody's starting up a card there. With
Not sure what that is. Yeah.
So with FHA again, they're just a little more lenient. But borrowers, because it's limited at 358, they were running into a situation now where you have a good qualified borrower, they really want to go FHA, but they can't because even though they qualify for a $450,000 home with FHA from a payment standpoint, the max loan limit kept them from doing that. So this moving up is going to open that door. Same thing with conventional. We had a lot of clients that maybe want to do a 3% down program on a conventional, which, you know, with exceptions to a few special jumbo programs, most borrowers can't do in the jumbo world, but they were capped at that 458. Now these new limits, it's going to open up things for those buyers who are at the higher end of the price point, are going to be able to take advantage of these programs. So it's actually a big deal. So.
No, I really appreciate you putting it that way, because I've got a lot of first-time home buyers that we get to work with, and you know, that's the classic conundrum of first-time home buying is you usually don't have a big down payment, which means you're more likely to run up against those loan limits because you're borrowing more money. So that makes perfect sense. Are there any downsides to this? I mean, it doesn't sound like there would be.
So no, it's great news because with the conventional loan limits going up, it's opened up the opportunity not just for people looking to buy homes, but also for people looking to refinance. Because with all this equity growth, I mean, a tremendous amount of equity growth, it opens up the ability for people to be able to take advantage of that equity and either do a debt consolidation to reduce that much less favorable debt, higher rates and stuff, higher terms, or do home improvements. And with this higher limit, it just allows them to access more of those funds.
Excellent. And this doesn't have anything to do with interest rates or anything. It's its own totally separate, I don't know what the word would be that I'm looking for, criteria or...
Yep, it has nothing to do with it. Didn't change the loan program as far as what does it take to require. It just simply for Fannie Mae and Freddie Mac said if your loan limit's over this, we won't buy it. It's not eligible, so there's no market for it. Same thing with FHA. And so now it just means that market has widened open. This again, as lenders, we always look forward to this time of year. But this year, because of the large appreciation, this movement was larger than normal. So currently, $548,250 is the normal conforming max loan limit. That's shot up now to $647,200. So almost $100,000 rise in that max loan. So that really opened up the door for a lot of people that, again, maybe couldn't qualify for jumbo, but they could conforming, but they really wanted to buy a higher price point. Now they can. With FHA, again, like I said, FHA gets much more complex because it varies from county to county. But on the national average, which was $356,362 for Lynn County, and for Benton County, $430,000. For Lynn, or actually most counties in Oregon, that's $420,000. So again, a huge jump from 356 to 420. And in Benton County, that's 483. Now I should also mention, these are based on single unit homes. All the programs do have higher limits. If you're looking at a duplex, a triplex, or a fourplex, they would have different loan limits altogether. So.
Okay, that makes sense too, yeah.
All
right, so this is good stuff. And if you want to have more of an advanced version of the behind the scenes of what are we talking about with loans being sold on the secondary market, I have the feeling that'll be another video right there, but we won't cram that into this. We won't make this a twofer in that regard. But folks, one of the things that I hope you're taking away from this is the helpful improvements that this, again, criteria, the right word? Okay, that this criteria for your borrowing ability really has on you as a home buyer or home refinancer, which I hadn't even thought about, so I'm glad you mentioned that. The other thing that I want you to take away from this is the importance of using a quality local mortgage broker, because you want an expert in your field who's got lots of options and is really good at problem solving and strategizing so that they can figure out exactly what loan package to put together for you with all the favorable terms, interest rates, all these things, and get you to the finish line so that you have a good setup for success when you're writing offers in a competitive market. And then, of course, you know, be able to have that as a successful package for the secondary markets to buy, which is part of how this all works anyway, right? So really great stuff. Joshua, I appreciate your taking time out of your day too to join us here today. And thank you so much for your service with our clients. Absolutely. So folks, let us know if you have follow-up questions, and if you've got any more video ideas that come out of this, let us know and we'll make them happen too for you. So thanks again, and thank you for your viewership.
All right.
Bye for now.